Hey, Danny Ray with Pinnacle Quote Life Insurance Specialist. I just want to talk to you today about a strategy that I do quite often for clients. It saves them a boatload of money, and it just makes too much sense not to do if you understand the strategy. We'll talk about pretty much a middle-aged person, 35 to 40 years old. That's what I'm going to base all these examples on, so you can better understand the numbers. This particular strategy can work pretty much with anybody with any health impairment. It's the layered strategy, okay, that I like to use for clients. So, I'm going to go back and forth, and I'm also going to show you on my screen what I'm talking about and the kind of savings you can have. So, when you're 35, 40 years old, just say 40, we'll just round it out, okay, and you got a family, kids are young, married a few years. If you get life insurance, you want to make sure they're protecting your family, okay, and going out as long term as possible. Now, normally, when you get a life insurance policy, you want to try and knock off two birds at one stone if you can. Number one, getting the last child out of the house, cap and gown up in the air, graduating college, but also if you can do that and go ahead and slide into retirement, okay, then you're knocking off two birds at one stone. You're getting the best of both worlds. So, but pretty much, you buy term life insurance not because when you die, it's because if you die. So you always want to go ahead and do that. Normally, what that consists of is you doing a 20 to a 30-year term. Most cases, a 30-year term. Now, again, going out the farthest is the most costly of life insurance. The longer your term, the more costly life insurance is. So we're gonna touch on the prices of that, and also the prices of doing layered strategy. Okay, and again, it's something that will save you a boatload of money. It really will. Okay, so let's just say we have a male, 40 years old. Again, 30-year level term, healthy guy. Okay, $1 million 30-year level term for somebody that's healthy at that age. Okay, you're gonna be running a best price in the industry is gonna be about $95. Okay, so $95. All right, and again, that's $95 he's spending over the course of the next 30 years, right? So total outlay for a $1 million 30-year level term for a 40-year-old that'll get him to 70 is about $34,000. Actually, $34,336.80. So that's how much money he is going to lay out over 30 years if he dies, or if he outlives the term. That's how much money he's going to lay out for the protection of $1 million. Now, again, it's apples and oranges. You're laying out 3 pennies to get $1. It's a no-brainer, right? But $34,000 is a lot of money. So with that being said, and again, what you got to keep in mind is every decade. To give an example, if your kids are 1 years old and you get a 30-year level term, what is the most important decade that you need to protect? Probably the first 10 years, right? So the first 10 years, if you die at any given time, and this is based off somebody making $50,000, your family's going to miss out probably on about $1 million of your income over 20 years. Okay, so with that being said, every 10 years, you're outliving your income. So why pay for something you don't need, right? I mean, if you get $1 million policy and 10 years goes by, you're making more money, your house is paid off, your kids are older, expenses are getting lower in some cases. What I mean by that is you're not buying diapers anymore and daycare and stuff like that. They're young adults or older children. So basically you already outlived your last 10 years, the first 10 years of the term. So why pay for something you don't need, right? So again, for $1 million on a 30-year level term, you're paying about $95.38. Now, with the strategy, layered strategy, and I'm going to show you, okay, real brief, on the layered strategy, all right, let's see here. Again, is it going to let me? Okay, on the layered strategy, I don't think it's going to let me. Now, you can go ahead and get a $500,000. You can get $1 million the first 10 years. That's really the most important, right? So you can get a $500,000 term policy in a 10-year. That is $18.06 a month. So jot that down, $18.06 a month. Okay. Now again, that's $500,000. You get a $250,000 20-year level term for $17.85. Okay, then you get a 30-year level term for $250,000 for $29.67. So again, they're overlapping each other. So the first 10 years, you have $1 million in coverage. You just got a 10, 20, and a 30-year term that adds up to $1 million. Okay, now Now, again, the first 10 years is the most important, and this is based on somebody making 50,000. These numbers work with everyone. I've saved clients well over $100,000 over 30 years, many, many times. Okay, so with that being said, for the first 10 years, you got $1 million in coverage. You're not paying $95.38. You're paying $65.52 for the same coverage. Okay, for the first 10 years. Remember, kids are young. If you die anytime in that first decade, your family really needs that $1 million. Okay, tax-free. All right, so let's fast forward to year 11. Okay, the $500,000 term policy expires. Okay, now you have 500 grand for the next 10 years. And again, your kids are 11 years old, probably 12, 13, 14 years old. So now you got $500,000, which is 10 times your income at that point. Okay, if you didn't make a raise, you probably did though. Okay, for the next 10 years. Okay, but again, the premiums come down. Okay, the savings on the layered policy for the next decade, okay, is going to be from year 11 to 10-year term, your premiums come down to $47.52. Okay, so again, the first 10 years you saved $3,576. Okay, the first 10 years. Had the same $1 million for the first 10 years. Premiums less, you saved about $3,500. Okay, now let's talk about the second decade. Sorry, I'm going back and forth, so just bear with me. All right, on the 11th year, which from a year 11 to year 20, okay, now you have $500,000 in coverage, right? So your premiums go down to about $47.52, 50% lower than if you got a 30-year level term for $1 million. Okay, that savings from year 11 to year 20, you're saving $6,103.20. So collectively right now, you're pretty close to about $10,000 in savings the first 2 decades. Okay, now in the 21st year at that time, your kids should be pretty much graduated high school or, maybe got a career. Your expenses, they're not depending on you financially like they were 10 years or 20 years ago. Okay, so at that time, on the 21st year, okay, the face, the face comes down to the 20-year term expires and the 30-year term is left. So the premiums come down again. So from the year 21 to year 30, your premium payments are $29.67 a month. Okay. Now again, that's a savings of $7,885.20. Now with that being said, now keep in mind, on that third decade, you're sliding into retirement ready to be on a fixed income. Now, if you're on a fixed income, would you rather have a $100 payment or close to it, or a $29.67 payment? Do you need $1 million at that point? Probably not. If you're making, if your kids are grown, your house is paid off, $250,000 would probably be something that's more marketable. Now, again, this is the person out there that the average American. But again, this strategy works with any kind of numbers you plug into it. All right, so over 30 years. You're saving $17,564.40. It's about 51% in savings that you're saving. Okay, 51%. That's a lot of bread. That's a lot of money. Okay, that could be close to 1 year, 2 years of tuition for depending on what kind of college your kids go to. All right, so let's reiterate. All right, for $1 million in coverage on a 30-year level term for a 40-year-old male that's healthy. Okay, he's going to be spending about $95.38 a month or $1,090 annually. Total outlay for over 30 years if they outlive the policy is $34,336.80. With the layered strategy, okay, $500,000, 10-year level term, you're at $18 a month. Total outlay in 10 years is $2,167. The $250,000 20-year level term for $17.85 a month. Okay, total financial layout over 20 years is $2,142.00. Okay, now on the $250,000 30-year term, you're paying $29.67. Total financial layout over 30 years is going to be $10,681. Okay, so total financial outlay over 30 years is only $14,990.40 compared to buying a 30-year level term for $34,336.80. Now again, a lot of agencies don't like their agents to go ahead and write this kind of policy because it takes money out of the agency's pocket. Okay, I actually worked at one of the largest life insurance agencies in the country at one point, and I used to get reprimanded for this, saving the client money. Okay, one of the reasons why I'm not there anymore. Okay, I used to write a lot of layered policies that saved clients a boatload of money. All right, and I used to get set aside and say you can't do this anymore. I know why, because the company was making less money, but it's the right thing for the client. That was my argument, saving them money. And the best thing about this strategy too is down the line, God forbid if you run into a financial situation where, it happens in life. Sometimes you just, the well's dry, right? Or something comes up financially that puts you in a position where you're strapped. All right, having a $95 payment might be a process of elimination. Okay, you might have to say, you know what, I can't pay my insurance premiums. Then when things turn around, you're out there shopping 10, 15 years later when it's $300 for the same policy. All right, this layered strategy gives you options as well. Okay, God forbid if you run into a financial situation where you're strapped and you're cutting corners and you're going to make sure the food's on the table and so on and so forth. Then you got 3 policies to pick and choose which one you don't need. Not only are you saving money, but you have an option to go ahead. You know what? I got to cut corners, but at least we still have some coverage. All right, you might want to get rid of the 20-year term or the 10 or the 30. You have options. It's always nice to have flexibility. When you have a 30-year level term, sometimes you don't, because in fact, if you do run into a financial situation where that $95 could be used to feed your family or put gas in the car to get to work, it happens. Okay, then at least this provides you with a lot of flexibility. All right, now again, layered strategy is something that I believe in. I write it quite often. But again, a lot of agents out there, and this is for independent agents is good for, but people that work for agencies, okay, they usually frown upon it because they want to go out for the 30-year term because they want to make the renewal, the residuals, they want to make the bigger premium. All right, so this strategy is best for the client, but it's frowned upon by the insurance company and the agency. So again, I worked at some place that frowned upon this. I used to do this quite often, and I've been reprimanded for this because it takes money out of the agency's pocket and the insurance company's pocket. Okay, so with that being said, the funny thing about it, the same company's now advertising this. So with that said, again, that's my little strategy on layered policies. That again, it works, saves you a boatload of money. It's not for everybody, but usually when I see somebody that's in their between 35 and 40, or ages 30 to 35 to 40. I immediately tell them the strategy because you know what, at that age you're starting out in life. You're in the process of being established. You don't really have that many assets. Every dollar counts, and you want to have the flexibility to protect your family. So that's it right there about layered strategy. Got any questions on this topic? I've written hundreds, if not thousands, of these policies over time. Give me a call, 855-380-3300, extension 2. And you can reach us on the web at pinnaclequote.com, and you can get an instant quote within seconds. Just click on the instant quote button, and you can schedule a time to speak to me as well by clicking on the button, Let's Talk. All right, and you can always visit the blog. If you have some sort of health impairment, health issue, could be cancer, high blood pressure, high cholesterol, anything really. Check us out on the blog, pinnaclequote.com /blog. It's Friday, back tail end of a 50-hour week. Then you can pretty much search or look at any kind of health impairments, and it basically explains to you, what kind of rates you can get, and I go ahead and write about that certain health impairment, to make sure you get the better rate, okay, and also shows you tips to how to get a better rate. So with that said, everybody have a Merry Christmas. It was great to explain this topic to you, and again, anything you need, or if you have any questions about this topic, feel free to give me a call at 855-380-3300, extension 2, and you guys make it a great day.